In our last couple of videos, we've been discussing dark pool liquidity and options flows, specifically for one stock, MicroStrategy. And it turns out over the last 24 hours, some big Wall Street players made huge moves. In today's video, we take a look at what just happened during the crash of over 30% of that particular market stock. And we look at whether it has ramifications for the rest of the markets and indices. Well, one thing's for sure, it's been pretty good buying the dip recently on the S&P and the Russell 2000. And as we mentioned, there are some sectors that tend to perform better in a Trump victory. Today, we'll break down whether they're doing the same thing as they did in 2016. And has crypto finally hit a temporary high? We've been looking at a dull market. Now we're about to approach 100,000, but the rate of change is too strong. Today, we look at similar situations and what might actually happen now that everybody is in the crypto market once again. And really that boils back to MSTR. Take a look at that. That's a big red candle. Let's talk about it right now. Stocks, commodities, and cryptos coming your way in today's daily show. This one is not to be missed. Well, welcome back everyone to the Daily Show. My name's Tom. It's great to have you here, and I'd love it if you're a first-time viewer for you to subscribe and, of course, smash that bell icon. It was Google down along with Amazon, but the rest of the market was running very well over the last 24 hours with small caps showing some strength. But I want to begin with a little bit about leveraged assets. You may see certain articles going around right now that show ETF assets are being leveraged at a $12 long to $1 short ratio. And this is something that we haven't actually had since 2021. Is it something we should be concerned about and looking into? Yes, of course. Is it something that I think is going to end the market right now? Generally speaking, no. It is something that we will be watching though into 2025. And obviously we know that margin will make up a huge deal on whether this market truly ends up having a massive problem in it or not. Notice here the RIDEX total leverage bull assets overall making new all-time high peaks. That doesn't mean it's over just yet, but people are very bullish and they're buying in again with leverage. And that shows you that maybe the bulls and the FOMO are alive and well. MicroStrategy was the discussion over the last 24 hours, guys, and rightfully so. Citron Research, well-known fund, obviously, has said it's short the company and long Bitcoin. Basically, they're betting against the multiple ratio. And in this case, they ended up selling their stock right down. It ended up falling over 30% on the session. But like anything, you want to put it back into, some form of normality. Is this actually what you would expect based on MSTR's rise through the social media platforms and obviously mainstream media? Well, in many ways, it just came back to the normal NAV that it's been trading at for quite a while. Around that 2.6 to 2.8 NAV premium generally has been where we're at. And this, of course, is the premium of which the stock is trading to the Bitcoin ratio. Now, is this a problem? I would say not yet, but of course, it is something that just shows you when things disconnect too much and people particularly go with that type of strategy of long Bitcoin, short MSTR, it could put pressure on the stock over the next coming months. And one thing I've really wanted to point out here was that MSTR is not just owned by retail traders. It's actually owned by large companies. And if you weren't aware of this, the Swiss National Bank also owns MSTR. So it's not like people haven't been going at this asset class. And the reason that it's kind of special in some ways is that it's allowing these funds that traditionally would not be able to buy Bitcoin because they get yelled at or regulators would come in and harass them and stuff like that to actually get it. And that is something that is unique about it. But could we have seen this coming? Well, over the last kind of week, we've really talked about this MicroStrategy dark pool stuff. And it started to exemplify itself with monstrous trades, especially on leverage over the last 24 hours. Now, whenever you get a market that's blitzing away from standard mean deviations, you know that things are eventually going to go bad and it's going to pull back. It's just the way markets are. And we did see what probably was accumulation, a huge move up, and now a dump back into this accumulation zone. So we'd have to expect somewhere around here for MSTR to find some buyers. Now, the real teller was this, the number one largest trade to ever go through MSTU, the 2 times long MSTR ETF. Yes, a monstrous trade, and the rest is history. You can see here Probably that was Citron and other companies having a crack at it. And in general, you'll notice that it's pulled all the way back to maybe their initial short zones. So of course, they'll be in profit here, and here, and here's kind of like the overall, you would say, break-even zones. So yeah, this is what you would expect. It's pulling back to normal. It's a shock to many, but probably not a shock to anyone that's actually traded those types of markets before. When things disconnect, FOMO comes in, retail traders go bonkers. And even I spent the last couple of days in the private community warning people against going at those highs. And the reason was, of course, that it might seem like you're going to get 10% or 15% daily gain. It's possible, but what happens when you get this big 30% sell-off? It was pretty much going to happen every time. There are certain metrics as well when things disconnect from reality, which always leads into a blow-off top. So let's talk about Bitcoin, because is Bitcoin doing the same thing? Obviously, we love Bitcoin here on the channel. I'm a bit of a Bitcoin max in terms of the cryptoverse. I think it's the one that makes the most amount of sense. And you'll notice here it's $98,000 at the time of this screenshot. But the rate of change is something to be keeping in the back of your pocket. In the previous video, we talked about the crypto fear greed index and how we could debunk that, because generally speaking, there were a couple of differences. First up, we're more likely in something like this rally than we are in other rallies in the past where they've topped off early. And this was to do with crypto fear and greed. Remember, we've consolidated for a large period of time and broken that consolidation. In general, you do not want to short this particular event. And of course, crypto, and especially Bitcoin, has been in a dull market over the last kind of couple of days, leading into the big pop over the last 24 hours. Now, what about rate of change though? Well, I don't think you can ignore this rate of change, because sometimes it's gone a little bit higher, but in general, this has usually peaked out a market or put it into a sideways action for a period of time, a consolidation fest. And it's not to the dollar accurate, but it certainly tells you that maybe you don't want to have extreme FOMO around this zone. If you're in, cool, I don't think there's much problems. But if you're not in, should you really be entering right now? Let me know in the comments down below. Of course, we do think that Bitcoin can reach 120, 130. Maybe we'll have to upgrade our targets since it's moving so quickly. But one of the main reasons why is, of course, you can see here the November pump, the September positive into October, November, and December positive stat. Everything has been pointing towards Bitcoin. And of course, now we've got the chance of even more central banks coming on and creating strategic reserves. Let's move over now to the stock market and talk about this double bottom or triple bottom style pattern. So far, so good for the S&P 500. Obviously, the data points towards further bullishness into the end of the year, and in fact, a 3-month positive across the board. We've been stating that the whole time. It was beautiful to see the pullback, and now we're breaking to the upside, as you'll see when you put it on the charts. Now, there is one level to kind of contend with, which we'll talk about in a moment, which is 59.50. And that's all about call options. But we can see here that November is pretty normal to see a dipping around this period, and obviously normal to see strength into the end of the month. In fact, the back of the month of November is historically, when you look at 1950 to 2023, that's 70 plus years of data, that we overall have a 70% likelihood of November being bullish, and generally every day is in fact got a bullish correlation with it when it comes to the end of the November month. There are a couple of other asset classes as well. Treasuries got one of the biggest outflows over the last 48 hours. Obviously, you can see that as a bit of a counterintuitive, contrarian view. We saw this happen back here in 2020 and that blitzed right up. It's a little bit unfair to use that one because, of course, that was also the pandemic itself. But in general, big outflows often can be kind of contrarian reads if you've got the time on your side. We also know that people like Wayne Whaley have been doing some good data when it comes to 30-year bond spreads, and noticing that in general, the point move is towards the downside. So generally yields will drop over the 15th to the 26th period, which is, pretty interesting. Market cycles, right in the middle still, guys. Nothing to change here. Generally speaking, if you're following a standard bull market cycle, then why wouldn't you invest like a standard bull market cycle? And that means that in 2025, we'll have new sectors to really look at as well. Speaking of sectors that are doing well post-election, it's pretty much the Trump playbook 101. Financials, tick. Regional banks, obviously one of our favorites, into the election. Yeah, tick, very good. Energy actually performing quite nicely as well post the US election, just trickling up there each and every day, and materials coming back through with the goods. Obviously, we've liked metals over the last couple of sessions as well. That's been pretty spectacular. Let's go over to some other dark pool activity. We saw the first real dark pool transaction come through FXI, not last 24 hours, but before that. Could this be a basing formation? We don't have the breakout yet, but we are certainly focused on Chinese markets because they've pulled back to the correct levels. We'll see whether they can start to bounce. Gold stock, nice. Materials, nice. Utilities, smashing it, up 4.88%. Uranium stocks also doing well, which is something we've talked about in our private community for the last week, and they've started to pick up quite nicely as well. Biotech, technology, and semiconductors actually weakening across the last 5 sessions. But when we look at the last 24 hours, it was utilities, materials, clean energy, and really things like the regional banks as well that were going up. And this is not, again, a sign usually of a bearish market. Regional banks and financials have been doing very well over the last 3 months, and that is a good sign for the bulls to continue to try to buy this up. Now, when we look at the S&P 500, the advanced decline line actually increased over the last 24 hours, which is good news. We obviously saw a new high being formed here with a nice wick. There was a little bit of kind of scaredness in the morning. Markets freaked out a little bit there initially. NVDA tried to get above the call wall, failed. I saw all sorts of tweets saying that it was like a huge multi-billion-dollar sell-off, and it was going, and then of course it instantly snapped that back up. But yeah, this is the thing. Good technical analysis, solid, obviously, base formation, and a knowledge of options has helped us to really find this level so far. Now, 59.50 will be an important level. And of course, we all know 6K is the ultimate. Why? Because 6K is a monstrous call wall. Now, could we get that 6,200 by the end of the year? Well, it's possible. And of course, we've done some detailing in that. We're only now on the 22nd of November. If Santa Rally comes to play, which is obviously happening in only a few weeks, then that could be even more epic. Let's have a look here. We've got rejection week, rejection week, rejection week. I mean, on the surface, you've got to say that generally speaking, any dips being purchased up. That doesn't mean that there isn't this type of wave that a lot of people have been posting in the comments. It is possible. And if it's going to happen, it would happen around here. And the reason why is a call wall, and also the 61.8 fib retracement. So obviously you can put that on your charts and have a look at it. So we are at a little bit of a resistance here, although I still favor the bullish side based on what we've seen in terms of flows, data, and everything we've shared over the last months. Let's move over to the S&P 500 from the gamma perspective, and you'll notice here that positive gamma could ensue in a big way. Why are we looking at this 59.50? Because you can see here the call wall. This is for the 22nd. Maybe it'll be too much for it and won't be able to get through, but it certainly is a call wall. And then 6,000 is the big area for the end of the or the start of next week. So 6K again becoming the call wall. And at the moment, it looks like 58.50, 5900 is starting to become where the puts sit in the market. So generally speaking, I'd say the overall structure, it's turned to positive gamma. Things are looking like they could actually squeeze back towards the upside, and we now have our call walls on the 0DTE option space. Tesla, 350, 350, 350. Obviously, it's trading below there. Until it gets through 350, it's not really going to see a huge, big move. And NVIDIA is always 150. Man, this level is so hard. Did you guys watch it during the day? It actually went above 150 and got crushed instantly back down. I wonder why. Maybe Wall Street were like, nah, not yet, not yet, not yet. But I will say this, if you check out our X, links in the description down below, I actually posted all of the big houses and every one of them miraculously, let's upgrade NVIDIA. $10 here, $20 there, some even more in terms of their targets now over the next coming months. US 10-year, let's move over to the market and see whether we've got any lead indicators here showing us anything worrying. Still floating around this trend line. No concerns there yet. Treasuries, big transactions, no flow in terms of price action. We'll hold and we'll chill. And we'll see whether that gives us something. What about the American consumer? Still looking, relatively speaking, strong. And of course, home buyers or home builders in this case ended up finishing bullish. That's a pretty good sign that the markets are starting to recover after that little dip. The US dollar really putting pressure on this high, still in an upward trend. We are at a resistance. We could be at a Wyckoff base, a Wyckoff distribution. It's possible. But if you're long dollar, I wouldn't blame you. I mean, the trend is up, but we are at this resistance. So, of course, I'll be watching. I'm neither here nor there on the dollar at the moment. We're going to have to see further evidence. But I would like to get some dollar trades on. I just can't see anything yet other than the bull side if you were going to do that. So we'll see whether that breaks on the weekly and then revisit it. Copper, not really showing us signs of extreme strength. We'll actually set an alert just above here for copper. If we get it through that 417 area, that's going to be pretty strong for, we would have to think, China and copper. They should go hand in hand. And speaking of China, you'll notice here, still trapped in the zone. So between that 61.8, 19.4 and 19.850, we're waiting for some form of catalyst. It's a game of cat and mouse for China at the moment. And what I noticed was iron ore seems to be front loading a little bit against China. So what this is showing you is that maybe things are actually starting to look good. We've got one dark pool transaction. We don't have flow yet, but yeah, certainly iron ore on the increase here, which is an interesting observation. What about gold? One of our favorites here on the channel. Strength to strength to strength. At the moment, I would be looking at this resistance up here at 2,700. I don't think it's weak yet at all, and it looks like it could move into there. I would say if a bear's going to come through, though, this is the point of worry for gold bulls. If we get through there, happy times, new all-time high, I would say, is incoming. And we still maintain that next year we'd like to see 3,000 for gold. We've said that for ages. Silver, a bit weaker, marked out here 3150 plus close. That could be good stuff. We'll be watching that on the channel if it does happen. Still bullish on silver. US oil, overall, strength to strength to strength. We've talked about this a little bit. It did show some nastiness, then obviously reverse. As a trader, you've got to be able to reverse your signals. Obviously, oil is a tough one. As a post-election trade, based on what we've seen before with Trump, then obviously you would generally say bullish oil stocks, and who knows with oil itself. But yeah, at the moment, it is bullish, and it's kind of dealing with grinding higher slowly. Let's now move over to Tesla. As we mentioned, 350 or really nothing interesting. We have a lot of small movement here. Just remember that could be considered an island if it gaps to the downside, which could be the weakness signal. This is obviously a big winner post-election. If the market chooses to sell it off, look for the gap, and then maybe it'll keep selling. But for now, I think it's still the upside, and we're looking for a 350 plus close to really give us that next momentum. As we mentioned before, 150 was too much for NVIDIA. It tried and it failed, and then it came back up and pretty much sat around the zone. Will we get a 150 breakout next week? That's probably going to be a catalyst to push markets higher. So I would say NVIDIA, whether you like it or not, needs to be set with an alarm above 150. This is a big deal. I'll set one here a little bit higher. And if we get a close up there, yeah, we're going to pay attention to it. Still holding the daily 20 moving average, still looking bullish overall. US 2K, beautiful trade. This one's straight out of our day trading masterclass. And I'll tell you, that's up a 2-to-1 ratio right now. Very, very nice trading. It's beautiful. I like it. So things are looking really good on that. Of course, the S&P 500 shows the same issue, which is that 61.8 is starting to approach. It's really the only big res we've got to move through, and that call wall. And then 6K seems likely. And then, of course, 6K plus, well, options are going to flow through. But the Russell was doing better. And it's time probably on our weekend video where we start to revisit the Russell versus the SPY. Because as you can see here, this looks like a big turnaround here is happening for small caps. Small caps time could be coming, or it already is here in our belief, because things have certainly switched towards the upside. The first time it's done it in years. I mean, it's been years. So this is actually a pretty good understanding here of technical analysis and structure. NASDAQ, what's going on there? Bit of a worry with NVIDIA initially and a few other big tech stocks going down, including Google. And you'll see here it managed to bounce and bounce and bounce, and it's doing all right. So it's holding up as best it can. Of course, a lot of people are going to say, Tom, it's a flag. It's going to die. Even if that did happen, I still think it's going to be caught and found with bulls. At the moment, we just don't have the warning signs that I would usually look for a deeper pullback. Sure, there are concerns. Sure, the media is driving fear, but at the same point, that's not really worth it. Speaking of media, you always know when people catch on to something that it's going to explode. And the media was all over this one over the last 2 sessions probably. and that's MSTR. Now, we all know that it's back to kind of the normal NAV. That's fine. NAV premium sitting around where it is. It's also back to the structure area of where you'd find buyers. Now, I would guess that it can go lower. It's potentially going to go to like daily 20, which would make some sense in this short. Do I think it's going to explode right now? Frankly, I don't. But of course, you must proceed with caution. There are risks in everything in these markets, and you're really betting on funds and cash, fixed interest that is, that wants to get access to Bitcoin in a way that they can do it, versus, of course, and the risks there, which obviously means profits potentially if it goes well. So yeah, it's an interesting fund. It's probably one of the interesting case studies, I would say, of the next year, when you look at something like this and the way that it's revolutionized some things. And yeah, in general, I would say that pullback of around 30+% is fine. It's expected. And generally speaking, I would usually say it begins consolidation after this, but that's going to require Bitcoin to consolidate. So let's have a look around the markets. Now, I posted a little bull kind of signal on Ethereum in terms of I started to see it go bullish during the session. We're actually doing a live session. I was like, man, that thing looks pretty bullish. And what you may have noticed at the start of today's video is I put a couple of Ethereum memes in. Man, those people are brutal. The Ethereum memes, some of them are so bad I can't even put them on the channel. They are funny, but yeah, they're not really channel worthy. And yeah, and everyone hates it, yeah. And that's because people are making fun of Ethereum maximalists or something. And in general, this hit the daily 20. It had the pullback from our first TP zone, and it broke above that 3218. That's not a bad sign for Ethereum. And if it can breach above 3442, which was the previous high, I'll set an alert up here. I'd say Ethereum should go up to 3800 or even 4K. You know, it should be up here in this 4K zone. So yeah, I mean, look, Ethereum is behind. It's had the consolidation. It's being made fun of, which is always traditionally when you start to see buyers come back through. So what do you think? Do you think Ethereum's starting to improve? Well, that's certainly a good little break up to the last 24 hours. And obviously, we're still bullish on crypto over quite a long period here. So even if Bitcoin struggles with that 100, the money can flow into the other coins for sure. Let's now move over to Bitcoin. Oh, Bitcoin. What a dull market into rally. And I actually went through all the dull markets into rallies. And traditionally, when you see the dullness, which is the series of higher highs, not like this. It's a series of higher highs like that one there, yeah? So this is 2023. That's a dull market. You do not short that, okay? But you'll notice that they tend to end with these explosive moves and everyone going crazy about them. And then they go into periods of consolidation. Now, here's another dull market, ballistic consolidation. Now, as we mentioned, we're starting to get the rate of change that's too high for Bitcoin. And that just basically means the move was very aggressive. It was, very nice. There could be still more upside, but you've got to be cautious here. If you're an investor and you bought in levels that we've been talking about since October and September, then you're fine. If you bought in November, you're probably fine. If you're buying up here, well, just know your risks. Ultimately, it probably goes up more, but you've got to know your risks. So we're close to 100. I actually put a poll up about whether we'd hit 100 or see bears sell at first. People hated that poll. They're like, stupid, man, it's only 2K away from 100. Hey, that's when markets sell. They sell just before or just after. So they don't tend to just hit 100 and say, oh yeah, that's a good level. They usually go before, because human psychology, everyone wants 100K. Or they blitz 100, FOMOing everybody in, go ballistic, and then they dump. So yeah, I think that Bitcoin still, it does have the signs of be cautious here. Obviously, hodler's going to hodl. There's no problems with that. We've already shown the stats. The stats are good, but I'm not adding any more Bitcoin at this level. We'll see. What are you doing? Let us know down below. Core retail sales coming on, flash manufacturing PMI coming on Friday. That's the major news out of the US. And as always, if you enjoyed today's video, please remember to subscribe, smash that like button, guys. And I hope you've been doing very well in the markets. Obviously, things as a summary here are starting to look okay on stock markets from that drop. Things are improving. Core walls need to be breached. NVDA ultimately needs to break 150 to really bring the market along with it. And small caps showed improvement. So there's a lot of ops. There will be more in the future. We practice abundance mindset here on the channel. If you like that, sub to it and follow us